name is Ben Reppond. Welcome to my YouTube broadcast. Today is August 21st, 2024. The talk currently is about interest rates. The interest rate hike, the likely hike, how much it's going to be, usually that's the conversation, how much it's going to be in September by the Federal Reserve. We don't know, but it reminds me of good news is bad news, and bad news is good news. Meaning that if the Fed signals or they actually raise rates more than expected, let's say they go to 50 basis points. I don't think they would go beyond that. But if they went to 50, depending on their comments, normally you think, okay, well, they're stimulating the economy. In some environments, that's true. But there's other environments where the more they raise them, the more it is signaling that the economy is in trouble and that it actually sends the stock market down. And there's other times it sends it up. It's just an interesting, in my opinion, an interesting paradox. Okay, let's get into the dashboards. Very unusual. I don't think you'll see many like this. Usually it's a mixture of green and red to the right, meaning above the 20, 50, 100, and 200-day moving averages. Some are above, some are below. In this example, all 7, including the long-term government bond at the bottom, are all above all 4 moving averages. I thought that was interesting. It tells you, which means there's falling interest rates. It tells you that this is a strong and a positive market. In the peak box to the right of center are the rates of return for each of the moving averages, each of the indexes, ETFs, for year to date. And the yellow box, sort of in the center, are the rates of return for this past week. This past week was an excellent week, even including bonds at the very bottom. So markets right now are positive. I can't tell you how long they're going to be positive. I suspect this month, it looks like until the Fed meeting, probably they're going to continue to be positive. That's what I'm reading. So, but for now, it was a very good week, and it pulled us up from the loss that we had during the first 9 months of the year, or the first 9 days of the year. So anyway, that's the report there. And then when we get to the S&P 500, break that down into the component parts, the individual sectors within the S&P, you can see that, again, there are 11 sectors measured 20-day, 50, 100, and 200-day moving averages. Every one of them are positive except for one sector for one moving average. That's pretty amazing. So again, you look at the yellow box and the pink box. Every single one of them are positive. Very impressive. This is the S&P 500 for the last 24 months. So you can see for this period of time, it goes up and down, but generally speaking, the black arrow points out that it is moving in an upward direction, and that move up at the end, at the far right, tells you this sharp move up influenced everything to go positive. All of the indexes, or all of the periods of time, 20, 50, 100, 200, all of those except for one. When I convert that over to this is a weekly chart, so one bar, it's a candlestick chart, one bar equals 1 week. So in the middle of that is some noise, meaning it can go up or down on a given day. But for the entire week, you can see the market moved down 3 days, and on the fourth day, to the very far right, that next to the last candlestick, the next to the last one, started at the bottom. At the bottom of that candlestick is where it started, way down, and then it moved up. And then the next bar started above that, and it moved up. So very bullish sign for me, that's the way I look at it, for the coming period of time. Maybe it's a week or 2 or 3, I don't know. But for this period of time, in my opinion, it's a positive indicator. The NASDAQ 100, tech-heavy NASDAQ 100, relative to the S&P 500, which is a broad market index, or ETF, the NASDAQ 100 is the numerator, S&P is the denominator. So when it goes up, it favors the NASDAQ. When it goes down, it favors the S&P 500. So you can see again at the end of the chart, the far right, upper right of the chart, you see that move up. So it not only did the market move up, but the NASDAQ, relative to the S&P, growth stocks in other words, moved up faster than the broad market. When you take the S&P and you put it into 2 parts, growth and value, the growth side of the S&P 500, usually technology, is the numerator. Value, SPY-V, is the denominator. So when it moves up, that favors growth. When it moves down, it favors value. You can see at the far right there, that represents 2 weeks where it went up, favoring growth over value. Another relative strength chart showing the S&P 500 relative to the small cap. And you can see for the last couple of weeks, to the far right of the chart, where it is going up, meaning, favoring the broad market versus the small cap. And this is a 5-year chart, a weekly chart, showing the long-term government bond, not relative to anything else, just the government bond. And it goes up and down. But generally speaking, over this long period of time, it has gone down. At the very end, it is trying to go up, and we'll see if that happens. It might. But if it goes up, that helps traditional portfolios. If it goes down, it doesn't. The dollar has been in a weakening mode for the last month or so, and maybe almost 2 months. And you can see that at the far right of the chart. It's still up. I drew a black arrow to show you the dollar is still strong against other currencies, but it is weakening a little bit in the short run. Gold also had a good week, and it moved up very nicely. And you can see that at the far right of the chart, that move up where the line is pointing in an upward direction, and my black arrow is pointing to it. And that shows you the increase in value of gold represented by the ETF GLD. Silver did the same thing. Now, silver has not had the consistency of gold. It's gone up and down a lot. The move up this last week for silver was greater than gold, but it has also had some down periods, and that has created more volatility, but they're both moving in an upward direction. When I put gold and silver on a relative strength chart, you can see when it goes down, that favors gold. When it goes up, it favors silver. So again, no surprise, it went up at the very far right of the chart, but it has a lot of periods where it went up and then down. Bitcoin has continued to be in a decline. It's gone up and down. It tries to go up and then it collapses and goes back down. So you can see since about March of this year, so that's 4 or 5 months, since March of this year, Bitcoin has generally been in a period of decline. The volatility index, now I can't show you everything here, I wish I could, but the volatility index, when that goes up, that means increased volatility in the market, meaning usually downward pressure on equities. This line, intraday, now one move here equals 1 week from end of Friday to the end of Friday. In the middle of this last week or the previous week, the volatility index went from, where was it? 12, 13 to 65. That would take it through the top of the chart 2 times above your computer screen. 65 intraday. And then it came back down, and it on a weekly basis, it shows it didn't even touch 24. But that was the 4th highest reading on the volatility index since inception. You know, you've got 1987, 2000, 2008, and last week. Last week was the 4th highest reading. That's very high. So, but it has come way down because the markets, I've shown you this, the markets have settled down, they're moving up. And so that drop at the very far right of the chart shows that it's all the way down to 14 as of last Friday. 14 down from 65, that's a lot. And that's good for equities. But yeah, that was just very short term and very dramatic. Asbury Research has Asbury 6, which is 6 indicators showing the strength of the market. If these are green, they're in the center column. If they're red, they're in the far right column, showing are they positive or negative. They're good indicators. It's not perfect, and there is a lag effect to all of them. But you know, basically, I think we went from all red or all but one red all the way to all green. So again, just showing the strength of the market this past week. Cross-asset relative performance, comparing one asset to another. So I look at, from those last 3 columns, the last week, the last month, the last quarter. It's a good measure to say, you know, where are things in all of those categories. The ones that are all green are stocks are stronger than bonds. No surprise. Even though bonds have gone up, stocks have gone up greater. Large cap, stronger than small cap. The U.S. market is stronger than the developed markets. And I don't know why this is not in green, but they're also, the U.S. is stronger than emerging markets. Corporate bonds are stronger than government bonds, and long-term bonds are stronger than short-term bonds. Okay, this is looking at the U.S. market measured by SPY, the ETF SPY. And how is SPY doing relative to the ETFs of other countries? You know, SPY, kind of a SPY surrogate in another country. So the ones that are outperforming the U.S. are 2 of them, Singapore and New Zealand. The U.S. is outperforming, bear with me, Chile, Peru, Germany, Spain, France, Japan, South Korea, New Zealand, Australia, and the emerging markets. No surprise we're doing stronger than Japan. Japan is dealing with the carry trade issue. Its markets have taken a big hit. It is affecting, and I think will affect, the world markets even more. But it, you know, a couple of weeks ago, I mean, it did some shaking. But the U.S. recovered nicely. The U.S., I show this chart to just show the U.S. versus Thailand. Thailand, in my opinion, over a period of, what is this, year and a half, is very, very weak. The U.S., relative to Thailand, is very strong. So this, I could compare any country to any country, but just showing the U.S. How strong it is. Even though we have our issues, we've had ups and downs, the Thai market is definitely a weaker market. Gold and silver. Gold finished Friday. The spot price of gold finished at $25.10, up 3.2%. You saw that on the chart, up 3.2% from the previous Friday. Silver finished 5.7% higher than the previous Friday at $29.03. The gold-silver ratio, using the spot price, the gold-silver ratio is 86 to 1. 86 gold, 1 silver. A monster box of silver, 500 rounds of pure silver, or virtually pure silver, is $15,150. It looks like this. That includes a $1.27 markup on top of spot, and that covers the retailer and the wholesaler. They come up with some kind of a formula on how they share that. What's interesting to me, based on information from my son Preston, is that whether it's 500 ounces, 20 ounces, which is 1 tube, or 1 ounce, 1 round, the price is the same, $30.30. So you want to go in and buy a monster box? Unless you have good negotiating skills, I guess, you're going to pay $30.30, including the markup. And then if you're on, you're buying one, I want to buy 1 ounce, same price per ounce. Interesting. It tells me that that is basically a weak market right now. It's a buyer's market based on supply and demand. When the bulls are coming after the bears, the bulls start to go in charge, which we've seen. Do you ever feel like the world's out to get us? I thought that was funny. Okay, thank you for watching. If you have questions or comments, leave them in the comment section below.